Just like depreciation, liability and equity accounts tend to give people a little bit of a headache as well. Well, it's not too bad if we take a look at it and it makes sense. Liability accounts track money that the company owes to other people. That's basically all it is. They can be long or short-term liabilities. Equity accounts, on the other hand, track money that's usually contributed by the owner or the shareholders to the company on their behalf. So it's kind of an investment in the company. And these both represent kind of an interesting quandary because people tend to think of things only as income and expenses. So if I take out a loan or if the owner, puts in $10,000, that's money coming into the company, and I try to find a way to make that income, but it really isn't. Instead, what we need to do is take a closer look at what these actually are. Short-term liabilities, like accounts payable balances or payroll liabilities, are tracked using regular QuickBooks features. You're used to doing that one. But the long-term liabilities have to be handled a little bit differently, and that's what we want to take a look at. Let's say, for example, that I'm going to be taking out a loan. I want to do just some general business stuff, maybe pay for an advertising campaign and some things like that. Well, what we need to do is add a liability account. Because we took out a loan, we have to say the loan came from somewhere, and we also have to have an account that we can repay for that loan. So let's start by taking a look at adding a liability account. Okay, I'm already in my chart of accounts. I have a couple of short-term accounts, current liabilities, payroll, and sales tax payable, but I need to create a long-term one. So I'm going to press Control-N. I'll make this a loan. Say Continue. And under the account name, we'll call it a Business Builder loan. Not a real technical name, but we get the idea. Then I can come down and say Save and Close. Okay, that of course is the easy part. We've just created it. Now what I need to do is I actually need to take the money from that loan that I received from a bank and put it into an account. Well, I'm going to deposit it into the bank account because that's what I need to do, but I'm going to kind of debit it, if you will, against this particular loan. So I'll go to Activities, and I'm going to make a deposit. Where was the money received from, and where is the money going to? We can already see at the top that it's being deposited to the business checking account. The questions now say, where did the money come from, and what account is it going to? So if I look at all of these options, customers, jobs, vendors, employees, none of those really make any sense. When I go from, this one does make some sense because I can take a look at my list and I can find my Business Builder loan and I can select that. I could put in a memo, of course. Something like that, and then a check number, a payment method, and an amount. Let's say it was a $5,000 loan. If I then go down to the bottom and click Save and Close, we can take a look now at our chart of accounts. Other current liability currently says that we owe $5,000, and if we had taken a look at our bank accounts ahead of time, we would see that these numbers have also changed because that's where we made the deposit. So getting the money isn't really difficult. Well, it could be, depending on how you take out your loan. But I mean, accounting for it. This is the correct way to account for it. It wasn't income from one of our customers. We don't make up a phony customer, which I've seen people do a lot and say, Joe X paid me $10,000 just so they can figure out a way to get it in. Now what we have to do is we have to figure out how we pay this back. Yes, I know. We don't want to, but you do have to pay back a loan. So let's go ahead and repay the liability. This is just a matter of writing a check. So let's go up to the top of the screen, click on Banking, and write a check. Check's going to come out of our business checking account. The question is, who do we pay back? Well, we have to pay it back to whichever bank it was that loaned us the money. And we actually haven't entered them into QuickBooks yet. So let me go ahead and do that now, and we'll do it just as a quick add. Called the Idaho Business Bank. Go ahead and use a quick add as a vendor. There we go. And let's go ahead and make a payment. Let's say that we were going to pay back $1,000. The problem that we have is that if we just enter $1,000, we don't know where that's going. So let's go down to our expenses instead and take a look at our accounts. One of the accounts that I have as an expense is an interest expense. So let me go ahead and pay part of this to interest and part of it to the principal. The amount I'll pay to interest, just to keep the numbers easy, is $100. And that's interest on the business loan. And then, can you guess which account we're going to also combine the other $900 of our payment with? I bet you probably can. You scroll up in the list, find our business builder loan, and this, of course, is going to start repaying the principal. This is the proper way to account for a loan that you've taken out, a loan that you're making payments on, but 100% of that is not going to principal. At this point, I'll go to the bottom, as I always do when I write checks. I'll do save and close. If we look at the line in our chart of accounts for the business builder loan, we can see that the balance has now been reduced to $4,100. After just a few more months, with my great business that I've gotten from my marketing campaign from this loan, the loan will be paid off, and then I can actually mark this account as inactive.